Hey guys, let's talk about another trade this past week. Um, this is Facebook, and like I was saying in a previous video, a good way to grow a small account is look on your 5 and 15 minute time frames, and then trade bullish or bearish setups, either candles or candlestick patterns off of those time frames. So this is an example of a bullish setup on the 5 minute time frame for Facebook, and we'll cover this pretty quick. So if you look here, this is what's called a bullish engulfing pattern. So if we go to um, their internet and show you what an engulfing pattern is, you can see here in an engulfing pattern, a candlestick is immediately followed by another larger one in the opposite direction. So this will be considered a bullish engulfing. You've got a red candlestick coming in. Essentially, this means that if it's red, you've got sellers, right? It opened here, it closed here. This was the low of the candle. This was the high of the candle. So essentially, right here, sellers to a certain extent flexed their muscles and pushed the price down. But for some reason, um, buyers still kind of held that candle up, because if you've got a wick at the bottom, that means that there's buying pressure. There's still buying pressure here. So there's a little bit more buying pressure than selling pressure. But it's still open here and closed here. So that's why the candle was red. Now, this next candle that comes in is bullish engulfing. Essentially, this is an opposite color candle that completely engulfs, right, or encapsulates that previous candle. So you can see here, price open here, closed here, and we had a little bit of selling pressure come in. But essentially, sellers tried to push the price down a little bit, but it didn't do anything. Because buyers stepped right in and pushed the price right back up. So you had buyers come in, and then you had a high. It came to that high right here, and it just pressed back down here to the to where it closed at, and there was no low. So that's a kind of another signal too, that you are probably going to have prices pushing up, because sellers didn't even get a chance to push the price past the opening level of that candle. So that's the pattern we're looking at now. So if we go back to the chart, you can see here, Facebook. So once again, this is key levels we're looking at here. So if we go to the daily chart, green, like I said before, is a daily resistance level or support level. In this instance, this is a daily support level. And so you can see every time it's hit this green line, let me get this alert out the way, that it's had some, it was an area of demand, right? It was pushed up by buyers here. Huge wick, hammer candle here, or sort of a kind of, hammer candle. And then we've got buyers coming in and pushing up here. So this is one of the most bullish candles you can see, because essentially price opened here. There was a little bit of selling pressure that came in, barely any, but it really just pressed up the whole session. So that whole day, the stock pretty much went up. So, but you can see it was at that clearly it was at that daily level where there was an area of demand. So now if we go to the 5 minute chart, things look a lot cleaner. That was that little bit of that candle that really pressed down. If I zoom out here, you can see Facebook just went up all day, right? So let's go back here. So a couple things we can talk about is it came in to squeeze. These two red dots were squeezing. There was buying pressure here, signaling that there was buying pressure within the squeeze, which is a good signal. It opened right around 321 and then pressed completely up. Right here, we had our red candle, and then we had that bullish engulfing green candle right at the key daily level. So that was a signal after the close of that candle that you could have got in right here, and then rolled that price up. Now, Going into kind of the strikes or the strike I would have bought, essentially when I trade, I'm buying one ATR from the opening price. So if the let's just say the price would open here at 321, um, I would have bought at the 332 strike because Facebook, if we go back to the daily chart, Facebook has a 10-point ATR. So 10 points from 321 is you know um, 331, but Facebook doesn't have a 331 strike. If you go into the trade for Facebook, you can see here it's increments of $2.50. So you'd have to buy it to 332 or the 330. I like to buy either right at the ATR or one outside of the ATR when I'm trading because essentially if that stock goes one of its average moves throughout the day, you're going to catch some pretty good gains, right? At a minimal risk. So let's just say you bought a 332 and a half strike. It ended the day at $4.80 at the ask. Now I charted it. You can go in and chart these strikes. So let's just say you would have bought it right at open. You would have spent 208 at the open, and then let's go back to the chart real quick. So if your stop, and my stop would have been at 331, 332 ish, you can see it got right there, right? So that was at 815, right? That I would have got out of the trade. So if we go back to the chart, you could have bought in at 207, 208, and you could have sold out at 549. So I mean that's over 100% return, right? On that option. Now, taking it a step further, obviously you don't know, right, that was going to turn into an engulfing candle. So you might have not have bought right at that 332 strike. So let's just say you're going in here and you're like, okay, we might have something here. It's right at a key level on the daily. Strong green candle coming up. Prices are already going up. And you would have bought at 324. So you would have essentially had about a $3 move already in here, right? So now, if you would have bought, you could have bought maybe 7 out from the 324, right? So you would have had a little bit higher price um, if you would have bought out on that option. So you probably would have bought at 208. You probably would have bought around, I'd say about 3, just because that price was going up, but you still would have sold out, you know, almost double what you made at 550 or what you bought in at 550. So that's kind of a quick example of a Facebook trade, and one thing you want to look at if you're going into this a little bit further is you want to make sure you had your XLC up lined up on Friday, and you would have seen here where XLC, which is the sector, it made the exact same move that Facebook made, right? And then if we looked at the SPY and the Qs and really focus on the Qs, you can see where it came in and made that same move right back up to, I think that's a daily level. But you can see how these moves mirrored each other. And I'm assuming at the same time the VIX was going down. So VIX is weak, SPY breaks back up through a daily level, Qs break back up to, I think that's a daily level, and then your XLC sector breaks back up. So like I always say, market, right, whatever the market does, usually the sector is going to do, and then your stock's going to follow. And now you just marry that up with a bullish candlestick pattern, and you're on your way to making some good profit. So if you got any questions, concerns, comments, you know what to do, holler at your boy. Hopefully that made sense. Like I said, I'm gonna try to do videos every day of good setups, stuff I'm learning, stuff to watch out for as a beginning trader, how to grow a small account. Um, Please like and subscribe. Really trying to grow the channel. Appreciate your guys' help with that. You guys have a good rest of your week. Study up. It's Monday. It's we got Monday off, so get your study on and get ready for a good week. I think we'll have a pretty good bounce in the Qs, and I think we'll have some pretty good movement. So, with that being said, talk to you later.